I'm joined by Ajay Piramal, the chairman of Piramal Enterprises Limited. Congratulations on a good set of numbers. So going straight to the big question there about the reverse merger of Piramal Finance and Capital into Piramal Housing. So what are the synergies that you expect and the opportunities that you see having been created through this and that you expect to realize over the next 2 years?
So we entered into the housing finance business in September 2017. And since then, we've attempted to grow this well, and actually we've had a good beginning in this space. So we realized that it made a lot of sense if all the NBFCs that we have, the lending businesses, were brought in under one umbrella. Yes. And hence we have decided to merge these companies, Piramal Capital, Piramal Finance, into Piramal Housing. The benefits that we will get is, first of all, I think our book will become much more diversified. A diversified book, first of all, helps in the credit rating agencies want a more diversified book because then they think that the risk is diversified, so our rating should get upgraded. With the rating upgrade, you will find that we will be able to get our cost of funds would go down by at least 30 to 50 basis points. Secondly, with a diversified book, we can also get a more leverage. So if you get a higher leverage, therefore the return on the equity that we have would also go up. Mm-hmm. Finally, that because of this merger, there's a deferred tax asset that has been created as well, which would mean that the actual outflow of tax from the current year onwards, that's in 2019 onwards, would come down to the extent of what is the marginal rate of taxation, which is 35%, and what is the MAT rate, and therefore almost an 11% saving on that is another option that's possible. So all in all, because of all this, I think that the return on equity, which would go up by 2 to 3% for the business.
Over what period?
It will start now immediately in this current year itself.
But that also, if we have to talk about the financials in this quarter, it doesn't take away the fact that the current and deferred taxes were higher by 84% in this particular quarter. Why was that, and do you expect it to continue?
So the overall taxation in the last year has been much higher than the previous year. So we paid almost 600 crores in tax for the year ending March 2018. That's because we had early on, there were other set-offs that were available for tax, which was in depreciation and some R&D expenditure that we could get tax benefits on. All those have been exhausted because our profitability has been good over the last few years. And hence, because of that, now we are on a full marginal taxation rate. That's why.
One more question on the taxation bit. The India consumer product segment has suffered because of GST and its implementation, especially the wholesale sector. So how do you see that reversing going forward, and by when do you see the profits kind of increasing in that particular?
So I think GST is now behind us and things have normalized. And you will see that the change will take place in the current year itself, because GST has meant that, the whole trade and all had to adjust to the stocking and all that. That has happened, and now it's all right.
Also, when we talk about the PHARMA, your non-compete with Abbott expires this year. So do you see yourself re-entering the domestic formulations market again? And if yes, how would that be?
We are evaluating whether we should enter into the domestic business in pharma. Many things have changed since the time we had exited in the last 8 years. And therefore, we are evaluating and not yet made up our minds as to whether we should invest in this or we should just stay out of it.
Any plan as to what kind of an investment that would be?
So it's all work in progress, so we haven't finalized anything.